The Fed finally cut rates, but who cares? It's not really going to help you with your mortgage and your ability to buy a home. Now let's dive in and talk a little bit about what I mean. So the Fed controls overnight lending rates between banks, more like short-term money, credit cards, auto loans, savings accounts, more direct consumer type things. Mortgage rates aren't really tied to the Fed's rate. They are tied to the bond market and more specifically the 10-year Treasury yield. So investors see a 10-year Treasury yield as a more safe long-term bet. And so when demand for treasuries goes up, yields drop and mortgage rates usually follow. Now, one thing about the Fed and mortgage rates is that mortgage rates often move before the Fed acts. So when the Fed starts talking about making a cut and the confidence that they're going to make a cut, mortgage rates tend to build that in. So we've already seen mortgage rates lower or go lower in the past several weeks. And the Fed policy is great and it's good news for the economy. It's good news for all the people. I think we're moving in the right direction, but it doesn't necessarily have a direct correlation with mortgage rates and lending and you buying a new home. So if you hear about a Fed funds rate, get excited, but don't necessarily get excited for your mortgage rate to go down. If you want more tips on this or more information, or you want to know what it's going to look like for you to buy a home right now or maybe refinance, reach out and I'll let you know how I can help.